the show. Because Q2 turned out to be a little weaker than expected, right? With a sharp drop in revenue, EBITDA, PAT, etc. as well. Tell me, how is it that you would characterize underlying demand environment with the government push now coming in? How do you hope Q3 is going to pan out for you?
Good morning, Aisha, and it's always a pleasure to be on your show. So, when we look at the industry and for our company particularly, we are quite bullish because all the product categories that we are working in, like air conditioners, washing machines, televisions, plastic molding, and electronic business, they have a long-term sectoral tailwinds which are supporting these products. So. Maybe quarter two, definitely because of the weak summer, there was a muted demand for the cooling products. But for us, the washing machine as a product category has done immensely well, and we have grown our business there by almost 40%. In case of air conditioners, I think the coming quarter three, like the quarter three that is currently going on and the quarter four that we are hoping should be doing well. And we have a strong order book, which is backing that confident.
Can you also take us through how the room AC segment is now performing? We had a lower sales because of the extended monsoon coming in. Going into next year, what is the kind of order flow that you're seeing?
So we have given a guidance. If you look at our numbers, we have given a guidance of almost around 5,800 crores that we are targeting to achieve the revenue. Out of that, the AC alone should be more than 3,500 crores, which will be a growth of almost 18% for us as compared to last year, FY25. That is based on our own new client acquisition, and we have increased the wallet share with the existing clients as well. So for us, the quarter three and quarter four are looking very good in air conditioning business.
And while you're talking to us about your guidance, Mr. Gupta, you've trimmed your guidance in the first quarter significantly, but you've maintained it in the second quarter. What is driving this confidence on some of the metrics like your Capex, your margins, your PAT and revenue guidances that you've given to the street? What is maintaining the confidence of carrying that through or seeing that through FY26?
So particularly when we talk about the revenue guidance, we definitely revised it downwards after the quarter one results because the visibility that we got was a little muted on the growth on the air conditioning business. So that's why we had to revise it. But as we move forward and quarter three and quarter four numbers that we have with us, the order book, the client forecast that we see, we are quite confident of achieving the revised guidance of 5,800 crores. On the Capex side also, please understand, we are not bogged down by the 1 or 2 week quarters. We have to look at how this long-term opportunity will play out in next 3 to 4 years. And we are trying to just create capabilities and capacities to take care of those opportunities, which will accrue in next 2 to 3 years' time.
Okay, so that sounds good going ahead. Also talk to us about the order book right now. You did mention that you have healthy order book across categories. If you could just give us a breakup in terms of which verticals or clients are driving this visibility.
So I can give you the broadly the category-wise idea. Like we are confident in air conditioners, as I told you, in quarter three, quarter four, we are ramping up very fast. In November ending and the December, the numbers are looking very good. And going forward for the January, February, March also, because please understand, in December, one point, sorry, I just want to add one point on the December side. There is a change in the rating label, energy label for the air conditioners, and there is a cost up in the and certain SKUs like 5-star inverter category and the 3-star fixed speed category air conditioners. The price will go up by almost around 10 to 11%. So there is a pre-build happening currently, and we are hoping that there will be a good pickup by our clients before the end of December for the deadline of the change of the energy label.
Mr. Gupta, on that note, now that you must have started stocking for the pre-summer and also on the back of this energy label change, what does that mean for your inventory and your working capital days?
So please understand, our inventory should get normalized by end of December. We are very confident on that. When we talk about the inventory normalization, it means we will be ending December with the inventory of almost around 1 month of sales. So that is what we are targeting by end of this quarter.
Okay, and in terms of your volumes, if you could just give us any indication what the volume target is for FY26 and how much of that has already been covered?
So in case of product wise, the volume, it's difficult for me to give you a breakup right now, but we are looking at when I told you in a holistic way, like we are looking at in RAC category, we are looking at a growth of around 15 to 20% in our business as compared to FY26. So last year we ended our AC numbers at almost around 3,000 crores. And this year we should be doing almost around 3,500 crores or 3,600 crores. That is what we are targeting in RAC. In case of washing machines also, we are growing our numbers by almost around 40 to 50% in value terms.
Right. The other thing I wanted to talk about also was your gross debt, right? Because that's risen to about 483 crore rupees amid this aggressive capex phase that you're currently in. How is it that you're planning to sort of balance expansion with leverage discipline over FY26 to 27?
So please, Aisha, please appreciate, we were sitting with a lot of inventory at the end of this quarter. So that also stretched our working capital limits. So I think that should get normalized. And if you look at the net debt basis, still we are cash positive and we have the cash equivalents of more than 600 crores with us. So we are adequately funded to take care of all the capex that we have already planned for FY26.
Okay, understood. And also, copper, other key commodities, fairly volatile of late. How are input costs swings affecting your cost structure, pricing agreements, margin outlooks, etc.?
So, Aisha, in our case, largely all the pricing that we do with our clients is based on the commodity indexation, and these volatilities or the fluctuations of the commodities or the foreign exchange are always a pass-through.
Okay, and lastly, Mr. Gupta, before we let you go, you have multiple capex underway at Bhiwadi, Supa, Shri City. You've signed an MOU with the government of Maharashtra as well. By when does all of this start contributing meaningfully to the top line?
So I'll go one by one. For Sri City, which is our expansion in southern India, we have started the construction of a new plant for refrigerators. We are hopeful by Q3 or Q4 of FY27, we should be starting a mass production there for refrigerators. And our expansion in our Bhiwadi, that should be up and running by Q1 of FY27. And for our expansion in Supa, we are hopeful that end of FY27 or FY28, we should be up and running with the new plant.
Okay, good to hear that. And thank you for your time today. Great.